Hey there, it's Mark Yagi. Hope you are doing well. Thanks for being here. What I'm about to show you is how to make 2 to 4% a month in reliable passive income. And now this is a recreation of a live event that I did just a couple of days ago, and it went really well. So I thought I'd record it and make a couple of edits so that it's easy for you to watch and simple for you to listen to. So the idea of this is a training and an eye opener and kind of just some good education about an alternative way to invest that a lot of people don't really know about. And even if they know about it, they don't have the nuances to be able to integrate it into a system. And I want to show some of those things. And I want to show you the potential. Hopefully your eyes will open at the end of this. That's the goal. I know we're all busy. I know you got stuff going on. But I want to try to apply some knowledge for you in just a short period of time. I'm going to give you lots of examples of trades, or at least a few anyway. And I'm going to show you a few calculations and a few stories and just really try to wrap it up so that in a nice bow at the end of this you have a pretty good idea what we got going on. The question is this: I don't want to waste your time, so let's get right off the bat. Is this training right for you? Well, great question. If you're tired of crappy or average returns on your investments, hey, maybe this is a good thing to watch. Spend some time. If you've given control of your money to an advisor and you've had disappointing results, I get it. This might be a good spending of your time. If you're sick of paying fees for someone else to manage your money, or if you don't have your own investing system, not just a way of doing investments, but a system, then spend a little bit of time on this. And if you want to take control of your investments, I have a saying: never give up your power in your health, your wealth, or your time. And that's what this is really all about. So it might be worth your time to go through this. So with that said, let's get started. Hey, who are you listening to? Well, my name is Mark Yagi. I'm not going to spend a bunch of time on talking about myself. That's not what I do, but I'm a wealth architect. I help people build portfolios and structured wealth. I'm a fund manager. I'm an author, all kinds of different stuff. I've got a lot of years of experience, almost 5 decades, which is crazy for me to say, but all this white, I guess, is worth something. I was the CEO of a Wall Street company for over 10 years. I've traded, and my company's traded over $14 billion worth of securities. I've helped hundreds of, maybe thousands, probably more like thousands now, of people learn a better way to invest. I'm a hedge fund manager. I've written a bunch of books. More applicable books for this is The Cash Flow Machine, Fundamentals, Hacking Money, Passive Income for Doctors, and I've authored tons of really cool trading courses. The Cash Flow Machine, which is really kind of what this is all about. Trade Like a Pro, Stock Trade Genius, and I have a few other things that I've done as well. But it's not about me. This is about you. Let's figure out if we can find a way for you to find a better way to invest, or at least learn about something to see if it compares to the other ways that you're investing. Now, here are some of the problems that I have found in all my decades of experience, certainly with today's investing. First of all, most investors are over diversified. You always hear this thing about, oh, you got to be diversified. Well, most investors take that to the extreme, and they end up getting really crappy returns because they're over diversified into too many things, and they just get below average overall returns. Investors are not significantly beating inflation. I'll talk to you about why that's really important in a minute. Investors don't really have a system. So what they do is they go, well, I got this money. I'm busy being a doctor. I'm busy being a lawyer. I'm an accountant. I'm a professional. I do my thing. Here's my pile of money, Mr. Stockbroker or Mr. Financial Planner or whatever. And they give up their power, and they think those people know more about investing than they do. What is really happening is those people are really good salespeople and not really good investing people a lot of the time. And so they consequently don't have a system. They figure the other person has a system and they give their money over. Investors are using this buy and hold strategy. I call it buy and hope, instead of seeking cash flow on stagnant assets. Like, you can buy a piece of land, and believe me, I have a couple of them. You buy them way out in the country and they don't give you any cash flow. In fact, it's negative. You got to pay your taxes, you got to maintain the property. You hope the value goes up. Oftentimes it doesn't, or it takes 20 years to make it go up. So it's buy and hope. Same thing with stocks. The goal is to try to get these stocks performing, make some assets on them. And I'll talk to you about the things that I'm going to do here in a second. Now, most investors think that they're happy to get 5% in a fixed income account right around now. And that is per year. So you put in $1 million, and this is what they told my dad, right? They said, Jerry, you just put in $1 million by the time you retire, and then every year you're going to be able to make 8%. And he was like, $80,000, I could live on $80,000. Well, today they don't have an 8% CD, but CDs are around 4 or 5%. But maybe you get $50,000 in a bond or a CD. Well, that's not enough for most people to live on anymore. $80,000, 30 years ago was a lot more than $50,000, obviously, and certainly in buying power than it is today. So on $1 million account, 5% is only $50,000. So you're not even keeping ahead of inflation. Now, let me just cut to the chase real quick and give you an example of what I'm about to talk about in more depth, so you see what I'm going to, try to compare this inflation with the market and the way that I teach how to trade stocks. So this is Nvidia. Nvidia is the best performing popular stock that we've heard of in 2024. And this is a quote on it a couple of days ago. And you could see the stock is right around $119, right? So you see the stock at 119. And so you can find an option, and I'm going to teach you about options in a second, but you can find an option and you can sell it to someone, which means you get the money, and this is an option that goes out about a month or so. It's the October 2024, goes out about a month-ish, and you can pick up $6.30 per share or $630 per contract. That's income that you get from selling somebody else the right to buy your Nvidia stock, okay? And they get the right to buy it, but you get to keep their $6.30. That's income. Now, I'll explain how all that works in a little bit, but the bottom line is we start to do the math. You go, wait a minute here. The first step is to go out and buy 8,400 shares of Nvidia, okay? That'll put you right around $1 million. And you could sell 8,400 shares or 84 contracts for $630 or $6.30 each if you're using the shares. So that makes $52,920 in pure income in 1 month. Now, remember, we just talked about 5% is $50,000 in a whole year. This is $52,920 in a month, okay? I think that's compelling. Is that compelling enough for you to watch the rest of this? Good, because now I'm going to show you a little bit more about how to do it, go into depth. By the end of this, if you're a little fuzzy now, hang with me. I want to make sure you get this by the end of this. So let's talk about inflation. You must beat inflation just to stay even, let alone grow your portfolio. This is what people are missing. They think inflation is 2% because the Fed tells them they're trying to make a 2% inflation target. But I can tell you over the last 4 years, inflation has been 11.1%. I could go into why it's 11.1%. I've got a couple of videos on YouTube that go into that. I took into account eggs and rent and the price of cars, the price of meat, the price of going out, all those things. And it's about 11.1% for the average American family. That's a high rate of inflation, right? And that means that if you're not getting at least 11.1%, you're going backwards, okay? So that's your baseline. I know it sucks. I know if you're shooting for 5%, 10%, like all the financial planners tell you to shoot for, you end up losing money to inflation because inflation's eating away at 11.1% rate on your money. So you've got to be at 11.1% just to break even. Then you've got to grow on top of that. So it's not enough to have those lousy returns that we used to be getting in the last several years. Now you've got to really strive for it. And that's the way the Fed wants it. They're structuring things like that, unfortunately. What do? Well, I want to talk to you a little bit about the power of premium collection or rent collection. It's kind of the same thing. And the idea is that we're going to be taking advantage of the certainty of time decay. Now, I'm planting that seed. If you don't know what I'm talking about, hang in there. It'll start to come clearer as we do this. But how do we do this? We do this by selling options, okay? When we sell options, we get weekly income. And then from the strategies that we do covered calls, we do selling puts, we do spreads and synthetics. We don't do all the strategies out there. We focus and go really deep on the strategies, 1 inch wide and a mile deep rather than a mile wide and an inch deep, like a lot of people. And so we get really good at some of the strategies and we sell options. That's how we generate our income. John Rockefeller, one of the richest people of all time, he said, own nothing and control everything. Okay. There's a little bit of an element to that I'm going to weave in here as we go forward here. So the question is, what do? We do a program called covered call writing, covered calls, selling covered calls, however you want to look at it. And how do they work? Well, I can tell you how they can work, but I made this little animation, and the animation's about 3 minutes long. So if you already understand covered calls at a really good level, you don't need to sit through this animation. You understand that you buy the stock, sell the call, you understand what the risks are. But for those of you that don't understand it or haven't really been that familiar with it, I'm going to give you an analogy using real estate so that you can understand what's going on. And if you want to fast forward because you already understand this, it's 3 minutes long. If you want to sit through this, even if you do understand it, it's a good 3 minutes well spent. All right, I'll see you in 3 minutes.
So here's a guy named Jim, the guy with the red tie here, and he owns some land. Let's call it a city block, and it's worth about $100,000. Then there is Bob, this guy with the red hair and the beard, and he sees this lot is for sale, and he hears that a big hotel is going up right across the street from that land. So he thinks that that land could be worth maybe $200,000, not just $100,000. But the problem is he doesn't have $100,000 to buy it. He's kind of broke, but he sees this big opportunity there. What he does is he approaches Jim and he says, "I'll pay you $10,000 if you'll sell me your property anytime in the next 6 months for your asking price of $100,000. Jim says, "Wait a minute, if I sell you my property for the same price I want to sell it for now, but the only difference is you're going to pay me $10,000 to take it off the market and give you a chance to buy it anytime in the next 6 months, and I get to keep the $10,000? And Bob says, "Yeah, that's what I'm offering." So they shake hands and they make a deal. So, who has the risk here? Well, looking at Bob, he could lose his full $10,000 if he's wrong. Now, if he's right, he hits a home run. Okay, now Jim, his deal is he gets to keep the $10,000 no matter what. It goes right into his wallet, and if Bob exercises his option, Jim also sells his lot for the asking price that he wanted. He gets his $100,000 too. So Jim in this case has a relatively low risk. Make sense? A week later, Bob finds out that it was just a rumor and this hotel is not going up and it's not going to make that property worth $200,000. And Jim still has a piece of property that's worth $100,000. Nothing's changed on his side. Let's analyze the positions. Jim still owns the lot and he got a $10,000 bonus or a 10% return. He also reduced his cost, he reduced his risk. That's another way to look at it. Bob, on the other hand, got unlucky. He invested his $10,000 and he lost all of it, so he was really unlucky. In this case, Jim basically just collected rent from Bob on his property. So over time, I would ask you this: who would you rather be? Would you rather be Jim, that has the lot, or would you rather be Bob, that you know was swinging for the fences, but he lost it all? Well, that's an easy one. You want to be like Jim. You want to be the guy that doesn't take the huge risk. Now, can we be Jim in the stock market? Well, you better believe it. And if you've ever played Monopoly, it has a couple of places on the board. Boardwalk and park places are the most expensive properties on the board. But if you own any properties on the board, anytime somebody lands on them, they have to pay you rent every time they go around the board. So there's always a Bob out there, there's always a gambler out there that's willing to pay you rent. And if you're Jim, you could take money from all the Bobs over and over and over again, all year long, and that's what we want to do. We want to start collecting rent.
Okay, so we want to rent, right? We want to rent things out. We want to buy assets and rent them out. That's what real estate's all about. That's what all kinds of passive income programs are all about, is owning an asset and getting a return on that asset. So let me give you an example. Let's say you buy a house for $300,000, just to pick a number, and you rent that house out for $3,000 a month. Okay, seems fair. You got this nice little house, 3-bedroom, 2-bath, $300,000. You get $3,000 a month for it. That's a 12% return in a year. You end up making $36,000 in a year. That's 12% on your $300,000. Not bad. At least you're beating 11.1% in inflation. Not by much, but you're beating it a little bit. Okay, so we could do the same thing with a stock. We can buy a stock like Amazon or Tesla or Oracle or Meta or Google, and we can rent it out. We can give somebody else the option to buy our stock from us at a predetermined price before a predetermined date. So in Amazon's case, we take the same $300,000 and we buy Amazon. We can rent that Amazon out for like $6,000 a month, and that'll give us a 24% return. which is double what we were getting in real estate. And we don't have to go plunge a toilet at 2 o'clock in the morning. We don't have to, listen to tenants whining. We don't have vacancies. There's issues with it, but to me, I'd rather be in the stock market with fewer of those nasty issues of owning real estate than being out of the stock market dealing with all that stuff. So that's just a general overview of what I'm about to talk about. So selling the option, like we just explained, gives us the premium. That's our income. So that's the engine that powers our account, is that money is coming in from the outside, from the gambler, right? From that Bob out there. And so selling options can be on a weekly basis or on a monthly basis. You can control your premium by changing the strike price. So, you could change the strike price to get less money, more money. You can have more stock appreciation, which is not what this is about. It's about the income. There's lots of ways you can control the premium and the risk. And we just need to like the stock. We have to like Amazon. We have to like Tesla. We have to like the stock that we're in, but we have to be willing to give it up over a certain price. That's good because we make our most amount of money over a certain price. So we're happy to give it up if we get our money. Well, this is all about getting the money. So we don't really care what the stock is as long as we really like it. And I'll show you there's ways that you could do it longer term too. But that's the idea, is that you've got to be able to give it up. Now, you can still keep it and you can roll your calls if it goes over the price, and you can end up keeping the asset as it increases in price. Don't worry, you don't have to get taken out of your asset every time it expires. That's what a lot of people worry about in this situation. Now, what are some of the components of a successful income strategy? Okay, I'm going to show you how to sell options the cash flow machine way. That's my system. Now, we study technicals, fundamentals, pattern recognition. We study volume and price volume analysis. We put a lot into finding the right stock and finding the right spot on the chart. I'll talk about that in just a second. We go through these cornerstones. There's 4 cornerstones I'm going to talk about, and we make sure that we have those cornerstones kind of dialed in. We repeat with consistent actions each week. We don't change our trading plan. We don't, decide one week we're going to do this and the next week we're going to go into some other, crazy trading plan. We're going to be just repeating the consistent actions each week. In fact, it's boring if you're doing this right. And then we have a system. So the idea is that we want to have a system. Most people don't have a system. They just buy a stock because, their shoe shine guy or their barber or whatever told them it was a good stock, or their Uber driver or whatever. And, you think you're smarter than Wall Street. Well, you're not. So you have to have a system. They have a system. You might as well have one to beat them as well. So let's start with those 4 components of a successful income strategy. And that is analyzing the fundamental data. And on my screen here, it's got the fundamental data all the way on the left. So these are things like earnings per share growth, sales growth, return on equity, those kinds of things. We also study technical data, which is the chart. And we look at support and resistance lines. We look at pattern recognition, breakout analysis, price volume analysis, and we try to analyze where the best place is to buy the stock. Speaking of that, I have 4 cornerstones that I talk about, right? I tell people that if you're going to do any kind of investing, you should have these 4 things down, right? The right stock in the right market, and right market is important. You don't want to be buying a stock when all the market is going down. At the right spot on the chart, and then we squeeze the juice, right? You don't want to buy the stock anywhere. Sometimes there's a stock that's declining, even if the market's going up. You want to find that right spot on the chart that gives you the best probability, and that's really important. Then we do what's called squeezing the juice. In our case, it's collecting the rent, collecting the premium on a covered call. Now, we're not just going to talk about covered calls, but let me get to that in just a second. So those are the cornerstones. And, a lot of people have used this system. Let me just take a quick break and just read a couple of the reviews so that you know that this is not just a bunch of BS. One of the people, these are just texts from my phone. Between my Roth IRA and my wife's, we have $430,000, $418 in one account, $12,000 in contributions. I'm well on my way to $500,000 a year and in a year-end value. Maybe I should shoot for $600,000 by the end of the year. So that's one. Then on the same page, I've just cut and pasted these things. Even through January of 2022, with Tesla's drop, I was able to gain 15% year to date. $160,000 turned into $184,000. This is a Roth. So I only added $6,000 in the middle of January. And then, yes, I don't want to give them too much money. He's talking about the IRS, I think. I'm planning to grow that account only to 40 to 50% with the cash flow machine. My Roth accounts, I'm planning on 100% return. Now, I don't like when people shoot for 100% return because I think they're getting a little bit greedy, but my system gives you the possibility that that's something that you can do. And I'm going to show you a little bit of that in a second. And this is the 200 contracts that I bought 5 weeks ago and rolled down to the 145 options. I'm up 123,528 and or 71%. And I know it's crazy, all paid for by the juice. That's what we call the premium or the rent. And then the last one, Mark, I wanted to send you a personal note. I'm such a believer in the system and so grateful to be a part of the Mastermind group. He's talking about Enphase. So, people are getting some value out of it. And I'm not, I don't take that lightly. I'm very humbled by that. And I'm proud of the fact that I can help people do that. And this is really all we do. I teach people a system and then I let them go implement that system with my help, with the help of the other people. And then we all as a team and a family kind of go out there and try to make a bunch of money off those Wall Street guys that are pretty greedy. So what are covered calls and debit spreads? Debit spreads are synthetics. Let's just talk about that. So you've got to be prepared to trade either bullish or bearish. Now, in a bearish market, it's a little harder to make money, but using this system, you can preserve your money if you understand that it's a bear market. And you can utilize pattern recognition. We buy our base position, which is either the long stock or the long options, which I'll tell you about in just a couple of minutes. And it expires in maybe 2 months to 12 months, sometimes even longer. You sell the nearer dated options to collect the premium and to hedge against that volatility and the downside and things like that. Plus, it lowers your cost basis. So over time, if you keep getting money in as income, like that house that you bought for $300,000, if you keep collecting the rent, eventually your basis in the house goes down from $300,000 to $297 to $294 to $291, $288. You get the idea. Eventually, you end up owning a free stock. And then it's an infinite return. But until then, you're just chipping away at your cost basis if that's the way you want to think about it. Okay? You with me so far? Cool. Now, where do you think the stock is going to go? You've got to analyze the support and resistance lines. This is part of that pattern recognition study that we do. We look at the breakout zones. Where does that stock want to break out? What are the moving averages and what are the volumes at the key points on the chart? And then we set those targets accordingly, right? We don't always set the target in the money. We don't always set the target out of the money. We kind of look and see where we think the stock is going to go. I spend a lot of time analyzing stocks and analyzing charts. And I think it's really critical to being able to kind of get probabilities on your side of where you think the stock is going to go. Hey, listen, I'm not always right. In fact, I'm wrong a lot. But when I'm right, the stock kind of does what I think it's going to do. And then you can make a little bit more money on that. And that's the idea. So for example, here is a stock. I think this is Tesla. And so you can see I've drawn some spots on the chart. Okay. So you can see there's a swing point here at that 271 level. And from that swing point, I kind of drew a downtrending, just touching the tops of the candles. And that creates this little downtrended line, right? At the same time, coming up through the 50-day moving average, you're seeing it kind of run into this little resistance level. That's one early buy point. So we're coming up on that buy point right now as we look at that chart. Now, I don't want to go into the heavy details, but just a couple of lines on a chart can help you paint a picture of the right spot on the chart and where you think the stock is going to go. By the way, I'll tell you, I recorded this video a few days ago, and the stock is much higher than that. Just from since we recorded that. So the analysis we did was pretty good. All right. So you could see you got the stock called Tesla, and you think maybe it's going to go to 230. Okay. It's at 229.81. It's a pretty good bet that it's going to close right around 230, I think. And so it might even go higher. In fact, I think it's going to go higher. But you know what? I'm happy to make $18.30 per contract or per share, $1,800 per contract, and it's a 34-day holding period. Okay. So in a month, I get $1,830 for every 100 shares that I purchase. So 100 shares to buy Tesla is $229,000. So I'll show you how that shakes out. Remember that $18.30 number. Okay. Because that's our income. So the first step is to go out and own 4,300 shares. Okay, so we're going to own 4,300 shares. That gets us close to the $1 million just to kind of keep comparing apples and apples, right? And then I'm going to sell 43 contracts for $1,830. Now, that income is $78,690 in 34 days. So if the stock stays at or above $230, I get to keep $78,690. The stock can go up 1,000 points. I'm only going to get to keep $78,690. The stock could go down, and then my account will go down too. But at least I've got the $78,000, $78,690 to offset to the downside. So the stock can go down 18 bucks, and I still haven't really lost a lot of money in general. Okay, so but you get the idea. That's how that works. Is I end up going for this income, $78,000 in 34 days. I could turn around and do that 11 or 12 times in a year and make a lot more than that 5% that we opened up with when we started talking about this. You with me so far? Isn't this cool? This is what I love to show people, because I like people, when people's eyes go, oh, I get it now. Now, if you haven't got it yet, don't worry. I'm going to give you a couple more examples. Maybe you watch this again, or maybe you watch some of my other videos. But usually by this time, you're starting to go, wait a minute. I sell somebody else the option to buy my stock, and all I have to do is promise to give them up that stock, give up my stock at that price. I'm willing to do that because it's better than just sitting on the stock, isn't it? Now, in this case, we've got a stock that's now $230. We got a break-even point of $211.70 because we got to get that income. So we lowered our break-even way lower than $229.90 or whatever it was, down to $211.70. If the stock goes above $230, we don't need to do anything. We just wait for the expiration, or we can close it out if we want. But there's no adjustments. There's nothing we really need to do. That's where the stock is right now. It's well above $230. So this would have been a successful trade, although it's still open right now. Okay, the stock stays in a range, so it goes from 211 to 230. Right. There is a time when it goes below your strike price where, and I show you how to do this, but you could do a trade adjustment, which is you might slide down the strike price, roll it down, buy back the calls that you have and sell at a lower price, move them out, down. There's different things you can do. But those are called trade adjustments, and they protect you in case the stock keeps going down, right? You could sit there and wait for the stock to keep going up to 230 if it doesn't, and that's another strategy. But sometimes I like to be a little proactive and show you how to do a trade adjustment so you can mitigate some of your losses. Now, what if the stock drops below 211.70? Well, you could do that trade adjustment strategy. In fact, I'm going to recommend you do, or you could just close out the trade altogether. Okay. There's lots of different options. That's why they're called options, I guess. So those are the things that you can do. Now, some of the advantages of the covered calls are, first of all, most of the time it's a bullish strategy. That's what it's considered on Wall Street. So you want the stock to be staying the same or moving up slightly, ideally, right? It can move up a lot, but you end up sometimes parting with your stock. You can adjust the short strike price. You can use a historical price and implied volatility to figure out the right levels. You can use anticipated price zones for price setting, right? And price selling, target zones, stop loss zones, things like that. Short calls, like I just showed you, that 18 bucks, that provides you a nice little hedge, right? A little bit of downside cushion, which is important with a stock like Tesla, I can tell you. And then you can convert into a defensive position with a simple trade adjustment. Like you can go deep in the money and prevent yourself from losing money all the way down to the strike. And so there's a lot of defensive strategies that I show you how to do as well. So there's a lot of advantages in covered calls. It's not just buy the stock and sell the call like so many people teach on the internet. There's a bit more to that, right? I want you to understand there's nuances, right? Anything worth doing is worth doing well. And so, you might as well learn the nuances if you're going to put your hard-earned money behind it. Now, there's something that's the next level of covered call trading, and those are called debit spreads. I call them synthetics, right? Because they're basically creating a fake stock out of a deep in the money call or a leap, right? So in this case, you have the high probability that the stock is going to stay in a target zone. That's what you want. You don't want the stock to be fluctuating down below your target zone. You want it to stay in a certain range. In the money or out of the money strategies are possible. You could do all the same things that you did on a covered call using a synthetic. Now, you've got a higher probability of making a bunch of money, a bunch more money, I should say, but you've got extra risk. Now, I don't think the risk is quite as high on a stock that stays in the same range. I think the risk really starts to amplify when a stock has a protracted downtrend. And then you have to really take some massive action to decide if you want to still be in that stock. But there is risk, but there's a lot of reward to learning synthetics. And I'm going to give you an example in a second. So hopefully by now, just take a quick time out. You understand, you buy the stock, you sell the call, and you get income. We're after that income, okay? So that income was about $78,000 on that Tesla trade. Now, let's show you the next step, the next level using synthetics, okay? So in this case, we have two different positions here, right? You see, we have the October 15th on the bottom, the same position, but we have the November 15th on the top. That's a 61-day position. So that goes out 2 months, and the option that we sold only goes out 1 month, those October 18th. So those are 34-day options, okay? So I want you to notice these prices that I have circled on the screen. 35.35 is the buy price, and then the same thing as you already learned, 18.30 is the sell price on the option that we already did on the other stock. All we're going to do is we're going to replace that stock position with an in-the-money call that expires in 61 days. Okay, so now it's not a stock anymore. It's a synthetic position that is made up of a call. Okay, let me show you how that works. So step one is you go out and buy 43 contracts. That only costs you $152,000 instead of costing you that big number that we talked about earlier. That's $152,000. Then you sell those same 43 contracts that we were just doing before for $1,830 a contract, and you get the same income, $78,690. So nothing changed on the short position. All we did was replace the stock with this long position, which is a synthetic option expiring in 61 days. Now you can go out 91 days or 125 days or 2 years or whatever. I'm just giving you this as an example. And so you can see we got that same income, but since we only had to invest $152,000, we end up getting a much higher return on our investment, which is 51%, right? For that same 34-day period versus what we got before. I mean, it's a lot higher, right? A little bit more risk. That stock could go down. And then we start to lose money and we have to play some defense and do trade adjustments. But I could tell you making $78,000 on $152,000 is a lot better than making $78,000 on 4,300 contracts at $200. You know, we're roughly $1 million. So either way, it's a pretty good trade. But the synthetics and the spreads give you just a little bit of an advantage as far as playing offense. Let's call it that. So what is the secret to what I do? Well, I want to say it's not really rocket science, but unfortunately for a lot of people it is, right? Because they don't have any idea that there's a system involved in selling covered calls. Most people watch my videos and they go, this is cool. You go out and buy a stock and you sell a call. And I do a lot of videos just to show people what's possible. But what's behind all this stuff is a full system. And what is a system usually, right? A system is rules, strategies, tactics, what-if scenarios, trade adjustments like I've alluded to. The idea here is that you remove emotions from decisions because emotions are the enemy of the trader. We get emotional. Money's got an emotional component. We've worked hard for it. We've got attachments. In our limbic system, we think we're going to starve if we lose all our money. So there's a lot of fear involved with it. There's also a lot of greed on the other side. You know, you want to take those emotions out of your trading. A system also is based on proven experience, study, research, experience of putting yourself through it. And I've got a lot of that experience, and that's what I've poured into this system. And it's not just something that we came up with. This is a system that's been around for a long time, and it's time tested, not just by me, but the other people in the program. And we've got a lot of other people doing covered calls for years and years and years, like 50 years, right? This isn't just a brand new thing. What I'm doing, the system is toward the newish area of what needs to be done in covered calls, because the world is getting smarter. We got AI, we got Wall Street people that are smart. We've got to be smarter than them. And the only way that I figure we could do it is with a good system. And so my solution for having that system is called a cash flow machine system. And that's got the rules and strategies and all the things that we talked about. We target 2 to 4% a month. And we do that by building a trading plan. Now, I don't want to spend all this time day trading. Day trading doesn't really work in the long term, right? So I want you to be able to spend 20 minutes to an hour a month doing this system. And that's what most people spend. Some people get sucked in and they like to play with the numbers a little bit more. But the more hands-off you can be, the better the system performs. Now, in most markets, certainly uptrending markets or sideways trending markets, this system performs really well. Even in slightly down markets, because we're always going to have down markets within up markets as well, it's going to perform well. It does reduce your risk in down markets. It makes income 100% of the time. You always get to keep the juice. You always get to keep the rent no matter what. So even if the stock doesn't do anything, it doesn't get called away, you get the juice. The juice always erodes over time. This is a probability-based system. So everything I design, the right stock in the right market at the right spot on the chart, that's so that you can get probabilities on your side, right? Can't go into all the statistical analysis. I don't want to bore you, but each time you add a little component of probability increase, you increase your chances of success. And that's the goal, is to say, look, I got a 50% chance of success when I click the mouse. But if I add 2 or 3% by being in the right market, where, in the right market, 70% of a stock's performance comes from the direction of the market. I don't know if you knew that, but you might as well be in an uptrending market if you're going to be in the stock market, because you got a 70% chance of being right, using the market as a tailwind. There's other stuff that I teach you too, right? So all of that goes together in building probabilities. Okay, I've spent too much time talking about probabilities now. This is what I do. I start to yap, right? But I have so many things that I want to teach you. Okay, you can do this from anywhere, anytime. I travel around the world. I just got back from a 6-month trip around the world. I just went east, right? And I went to 11 different countries on that trip. It was a really awesome time. But the idea is that you can create financial freedom. If traveling is your bag, travel, right? If the spa is your bag, go to the spa. If golfing is your bag, whatever it is, do that. You could ditch your 9 to 5 if you're stuck working for the man or stuck working a certain schedule. You want your money to start working for you, especially as you near retirement. That's what the system allows you to do. And it allows you to be completely independent. So what is the system? Well, by now you probably figured it out. It's called the cash flow machine. It's my creation, my invention, with a lot of help from a lot of the people that have been involved with me over the years and from a really great team. But it's something that I'm really proud of, and I want to tell you just a little bit about it. Now you understand how it works. Let me just tell you a little bit about what we offer, and then you can decide if you want to go any further with me. So what's the secret to what this system does? Well, first of all, I have something that I showed you called the cornerstones, right? Right stock, right market, in the right spot on the chart, and then we squeeze the juice or collect the rent. And so I have this little cycle called the cash flow machine cycle. We collect the rent, and then we compound the interest, and then we hedge the risk, right? And then we do it all over again. For the rest of your life, you're going to collect the rent, compound interest, and hedge the risk. That's the way the system works, right? What I have is a small private access group of investors. They get access to my trades, access to my hedge fund strategies, access to my market commentary, where I talk about the economic situation and the Fed and what's going on in the world, and strikes around the world that are going to affect us, and inflation, things like that. And then access to my market timing system. Market timing, I believe, is a huge component of what we do. And so I spend a lot of time teaching people and talking about that. This cash flow machine system I've talked to you about has all the components we mentioned before. 2 to 4% a month. All we're going for is these little small wins, right? We want to reduce your risk in down markets. We want to give you protection. This is a probability-based system. The things that we talk about that you need to have in an investing system, we cover those in this cash flow machine system. I talked about where you can do this, but I also take you through a 9-step process, right? I don't need to go over it. It's right there if you want to stop this right now and look at it. But, it's a 9-step process, real easy to go through, really easy to understand, and really easy to implement. That's the goal. Now, we've got video courses that are going to teach you how to do this. I think it's a college level course, right? It's over 15 modules and 70, I think it's more like 80 videos now. And I keep adding more bonus videos because I keep learning too. And the markets are never the same twice. And I want to teach you that. So I add this to all of our programs. And so it's based around a very sophisticated, cool, easy to learn college level course. We also take a group of like-minded individuals, people like you, people like me, and we're all learning and growing together, and we're all focused on this vocabulary, this system, this set of rules, and we're all holding each other accountable. It's actually really cool. I give you private mentorship. So this program is called the Cash Flow Machine Mastermind Mentorship Program, private mentorship from me. is part of it. If you want to learn something, you can, let's say you want to learn golf, you can grab a golf book by Tiger Woods or whoever, but that's not going to make you a good golfer. You can go get a couple of lessons. That's not going to make you a great golfer. But if you start to get mentorship and somebody's with you a lot, especially as you're trying to get your feet on the ground and says, don't do this and try to do that. And, you can run some ideas by me, things like that. That's going to really help you get some success. The same thing with golf, right? If you have a coach walking around with you while you play 18 and telling you what to do and how to think, it's going to give you a lot of chance until you, a lot better chances until you can stand on your own 2 feet or, help you run even faster if you're already at a good level. So I'm looking for a few people who get it. Not everybody is perfect for this program. I'm looking for people who want to make money in any type of market, people who want to create income from cash flow weekly or monthly. And you don't want to spend a bunch of time, like I said before, glued to your computer. My goal is to try to do this in 20 minutes a week and boom, you're done. That's the goal. So if you get that, if you like that idea, then cool. What is this whole thing called? It's called the Cash Flow Machine Mastermind Mentorship Program. So let me tell you what you get. You get all my Cash Flow Machine courses. That's a $10,000 value. It's a mentorship, which is $48,000 a year with my mentorship. The private access group is $12,000. The mastermind community, well, I think it's a priceless group of people that have a bunch of experience that could tell you, hey, I was right there when I was learning what you're doing, and I can be, I did this and it helped me understand this, right? And that's priceless. We have a chat group on WhatsApp plus weekly accountability calls. We have mastermind calls. That to me is at least a $10,000 value. I can't put a value on that because it's so good. One trade that somebody helps you with can make you $10,000 or prevent you from losing it. You add all this stuff up, it's at least $80,000 worth of value in this program. Now, like I said, that's not for everybody, is it? Right? It's an expensive program for sure. But I also have a couple of bonuses to make this worth your while. So I've got 3 bonuses that I'm going to include in this. The first one is called Secrets of Gap Analysis. It's a video that shows you why it's so important to understand where the gaps are on a screen, right? It's that technical analysis component, but a lot of people don't spend time on gap analysis, and they're so important, so important. The second one is a pretty comprehensive book that I put together of the best performing stocks from 2019 to 2023. You're going to start to understand pattern recognition, understand the fundamental traits of what made those stocks the great performers. And so I study those for you so that you could see what's different about those stocks than all the other junky stocks in the market, okay? And then I have a program called the Trading Surge Method, which is going to help you kind of identify the right spot on the chart and then use that method to apply within the cash flow machine strategy. So there's 3 really cool bonuses worth a couple of grand for sure on that. So let's talk about what we have to offer. We have all the cash flow machine courses, 10,000, mentorship, 48,000, private access group, 12,000, the mastermind community, chat group, another 10,000, plus the other bonuses that I just talked about. Now we're talking about $82,000 worth of value in the program. Now, I'm not going to charge you $82,000 to be in the program, although I have a VIP program that's at $85,000 where I spend a week with you in a really cool setting in Miami or in Paris, and we go really deep on how to understand the cash flow machine. But for a lot of people, they don't want to start with the VIP program, although to me, it's the best program I offer. That's $85,000. I'm not going to charge you $85,000. I'm not going to charge you $82,000. If you're interested in this program, 25 grand. Okay. So the program is 25 grand. I believe it's worth every bit of 25 grand. And I'll tell you why in just a second. And the way I do that is you just do it in 10 monthly payments. You start out with a $5,000 setup fee and then 10 monthly payments at $2,000 until we get to 25 grand. Okay. But I don't want to stop there. I want to make this a no-brainer for you because I believe this should be a no-brainer for anyone with at least $150,000. Not less than $150,000. I have other programs that you can click around and find them. But if you got more than $150,000 to invest, then I really want you to think about this. Okay. I really want you to think about, investing in this program because this could be a life changer for you. Okay. It's been a life changer for a lot of people. I don't know if it's right for you, but at least start thinking about it. Let me make it a little bit better. I have a little special offer too. If you want to get involved right now and you want to get a discount, I'm going to give you a $6,000 discount. Plus, I'm going to give you all the bonuses if you pay up front. And that means it's a $19,000 investment. Now, I'm not going to spread it out over 10 months, but hopefully you can afford that, right? Because if you can afford it, it's an investment in yourself, right? If you can't make $19,000 back from what I've taught you in the first several trades, I probably don't deserve your money. So what I'm going to do is I'm going to give you a money back guarantee to say, look, you've got a year to make back the money that you've invested, the $19,000 you invested. If you follow the system and you don't make back your money, I'll give you your money back. So, we're going to have to keep good records and make sure that you're following the system. But if you follow it, I have so much confidence that this system works that I'll make sure that it does work. And if it doesn't, I'll give you your $19,000 back. By the way, I have another 10% off on if you pay me by Bitcoin. So, I'm a big Bitcoiner. So I believe that the Bitcoin economy has started to become a thing, and I want to get paid in Bitcoin if you can do it. So if you want to do it, I'll give you another 10% off my already what I think is a generous offer. So the next steps are you can click on the link below to schedule a discovery call with me or somebody on my team. It's not going to be a hammer time call where we're going to get on there. I'm going to hammer you into buying stuff. I'm not really good at hammering people. Like if they want to buy it, they're just going to buy it because it's a really good investment. And if they don't, that's cool. I wish you luck and off you go. The question I want to find out is this right for you? And that's going to happen with a conversation. And you have to decide if it's right for you. Are you a good fit? Like there's been a couple of people that I've turned down that are not a good fit for our mastermind community. And I've told them, look, I don't think you're a good fit, or I don't think you're going to learn right. You don't have the right mindset to learn, things like that. I can figure that out in a quick conversation, and so can the people on my team. And so click on the link below to schedule a discovery call. It'll take about 15 to 20 minutes just to find out if it's right for you, maybe, get you to apply for the program if it is, and at least find out, right? So let's find out right now. Let me at least decide if this is right for you. First thing, if it's right for you, you are a kind of person that wants to make reliable income, right? You're not swinging for the fences and trying to shoot for the home runs. You're setting yourself up for retirement. You're looking for cash flow. You want to spend less than 20 minutes a week to do it. If you're looking for a day trading program, I could teach you how to do that, but I'd rather not because I don't see very many people succeeding. If you've got at least 150,000, preferably 250,000 in investable income, up to 4 or 5 million to put to work in this program, it's going to work really well for you. I've got a guy in the program. He made $2.5 million in the first few months in the program, and he was doing some synthetics for sure, but he did really, really well. And he's an older guy. He's in his 80s, and he did amazingly well with this program. And, I want you to be one of those success stories too, because I'd like to put it on my website, frankly, because I want to help other people get this knowledge. All right. If you have a willingness to change your mindset from trying to kill it in the market to making 2 to 4% a month. Now think about 2 to 4% a month. That's 24 to 48% a year. That beats the 11.1% in inflation that we talked about earlier, right? So that's really the goal. So let's go back. This is all of these things are included in the program, and it's value of $82,000. Your price right now is $25,000, or you can do the special offer that we talked about, which is $19,000 one-time payment. The next steps are to schedule a discovery call. That's really where we are. So if you've stuck with me to this point, thank you for being here. I hope I've made it worth your while. And I hope to see you on the inside of the program. Let's see if it's right for you. Schedule a discovery call. We'll see if this is a good fit. If it is, awesome. Then I'll see you on the Mastermind call on Friday. And if it isn't, there are other programs that I have that you may want to just take the course without the mentorship, without the community. I think the Mastermind is the best if you've got the money to invest. If you don't, I have other courses that I think are awesome too. So listen, thank you for your time. I know I got through a lot, but listen, thanks for being here, and I hope to see you on the inside. Take care.